Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on gregschnell.com as well as StockCharts.com. So the bull market continues, and despite every other market analysis tool I've seen, it just keeps chugging along. And I heard Jim Cramer today said it's not all about the Fed, but basically we've seen every time where the Fed kind of puts horsepower behind the market, the institutional investor just stays all in until that drama stops. And in this case, it doesn't look like it's going to stop anytime soon. And so we continue to see, I'll call it the risk to the downside controlled by the Fed. And so that gives investors a chance to push to the upside hard. And it seems like everybody wants to do that with the NASDAQ breaking out to new highs. So today I want to cover off retail, and I'm going to call it shelving is important. And what I mean by shelving is, in the spring, there's some things you'll pull out, like your golf clubs, and you'll use those. And then in the fall, you might pull out your downhill skis and get ready for winter. Shelving the bad stuff and pulling out the good stuff is important. And we're heading into the fourth quarter. We're heading into the back-to-school season, which is under duress. But then we've got the Halloween season, and then we've got Thanksgiving, and then we've got the holiday season or the Christmas season. So I want to cover off retail. I usually like to do it early in July, but I think this time we're going to try it in early August here, and there's some reasons to do it. But I want to show you first of all how I sorted. So I've got the old sort order shown, and I want to show you how I changed that sort order to get rid of the chaff and bring the new stuff to the top. And then, so retail names have been hard hit, really hard hit. And I want to look for the leaders by sorting the charts technically. So I don't want to go through price earnings ratios, and I don't want to go through financial analyst reports and analyst expectations and all that. I want to see where investors are putting their money to decide who the winners are. And so that's what we're going to do today. So let's jump into the charts. And here I've got the charts sorted in the way that I had sorted them last time. And the reason we know that is because see how I have these numbers sorted at the beginning. Now for some of you this will help, and for others this will be new. But what I want to show is that stage stores at the last time I did this, which was probably last September or maybe even later in the year, was one of the leading stocks, and now it's not quite as strong as you'll see. And JW Nordstrom was one of the better looking ones, and now it's not quite as strong. So this order constantly rotates, and as the names change over the years, you want to be all set up. So what I've done is I have a retail chart list, and in that chart list is all these different names. The problem is, let's just go look at a few of them, and you'll see what I mean. So the stock at the top at the time was one of the better performers. What you see is September of last year, this Stage Stores broke out to the upside. And on its breakout, it ran pretty well. And this was a $1 stock, and it went to $9.50. You can get by on that kind of return in 4 or 5 months. But you can see it's no longer the same story. And so we don't really want it at the top of our sort list. But what we do want to find is the stocks that are leading, that are now got really strong scooter rankings, or we could rank by distance above their 200-day moving average or other tools. But I'm going to use the scooter ranking tool, and that's a StockCharts tool specifically. And the idea behind that is it ranks things based on their technical chart pattern and tries to draw attention to the leadership. So when this scooter ranking was up near the top, this was a pretty good place to be invested, and when it fell out of bed, it was a great place to leave the party. So again, the idea is to shelve the stuff that's terrible and pull out the stuff that's needed. And so how do we do that? So we're going to go back to edit list, and what edit list has is a function right at the very bottom. So I'm going to press scroll down, And we get to the bottom of this list. Now we're going to select them all, and I'm going to get rid of these numbers, which for me are how I sorted it. And the way we do that is we select them all and then we hit remove numbers. And by removing all the numbers, we can start again. And as you can see here, the only thing we have is the stock name and ticker, and we can't really sort on that. So we need to find some other method. So in the summary mode, what we can do is we could choose the columns we want, and we could pick sector and industry. Well, in this case, I've got retail. So no reason to kind of sort by sector and industry, but what we can sort by is the scooter ranking. And when we do that, that's going to take the bigger company names, obviously, and put it on the list. And when we sort by that and now put it in this order, we want to go look at these charts. But if I click on Alpha Pro Tech and click on it, the next stock I look at is not going to be Alpha Brands. It'll go back to alphabetical. So here's Alpha Pro Tech. And again, if we go to the next chart, it's not going to bring up the second best one. So we have to save them in that sort order. And so in order to do that, let's go back into View All, move into summary mode, and in summary mode we want to sort it by the scooter ranking, so we've got the strongest one at the beginning. And we also have one other problem, and that is right at the bottom here we're going to have a whole bunch of stocks that don't have a scooter ranking. So in that case, usually if they're not big enough to have a scooter ranking, I like to sort them by price. And so we're going to do a twofold sort. We're going to sort it on the close, and then we're going to sort it on the scooter ranking. And what that will do now is the most important thing will be the scooter ranking, and if it doesn't have a scooter, then it'll sort it on the close. The way we lock that in is we want to add numbers over here to the beginning of these names. And so we're going to scroll down again to the bottom, and in this case on my Mac I hit function and the right arrow key, and it takes us to the bottom of the page. And what we see is this number in sorted order panel. So we don't have numbers here now. When I click this, we're going to have numbers in the order I've sorted it. And so you can see they all appear in 10, 20, 30, 40, 50. So now again, when I click on Alpha Tech Pro, the next stock that'll come up after that is HanesBrands. So here's Alpha Tech Pro, and again, if I go forward one chart, we can see HanesBrands is starting to show up. So that works good. Now, again, the idea that we're trying to find, not only are they strong stocks, but we want to make sure that they're not strong stocks that are already starting to fail. We want to make sure they're breaking out of bases, or they're starting to go on their seasonal run. And back here in August, September of 2017, we saw a big run by HanesBrands, not a bad run in 2018. A pretty poor one all the way until January actually of 2020, and now it's broken out to a new, I'll call it 4-month high. And with the price action last week, it broke out briefly for an intra-week high above the February high or the early spring high in 2020, and takes us all the way back to a new 52-week high. So we have a stock here that's a new 52-week high breaking out. That's a good scan for a lot of institutional investors. It's what's starting to break out to new 52-week highs. So with that type of information, we can start to analyze if these charts are starting to get going. Now, HanesBrands hasn't been a very strong stock for a long time. The scooter ranking has spent most of the time below 50. And again, let's talk a bit about what the scooter ranking does. The hockey teams have just gone back to play hockey, and what they've got is 24 teams. And as they start the league, they're going to say who's got the most wins and who has the most losses, and they're going to rank the teams by the wins over the losses. We do that in the stock market, but we need to use something different. And the reason is, it's not just one day of wins you're looking for. It's not just a couple of days of wins. What you're looking for is when the stock is actually starting to outperform its peers. And that's what the scooter ranking shows us. It shows us that the price action, not just the number of wins, but the actual number of goals scored, as a sports analogy, is getting extreme, and they're doing a really good job of it. And when we go to Amazon, you'll see that it spends most of its time up at the top here. But again, the goal is to try and find some sort function that we can use without getting into the price earnings ratios and all of that kind of data on each one of these stocks. So again, as I said in the introduction, we want to go through and drill down on a particular industry. So in this case, I'm going to use the view all function. And now we're going to start to look at these charts. So here is Alpha Pro Tech, and I don't know anything about them. Chart was obviously a beauty from this move from $4 and heading all the way up. Its scooter ranking is pretty good. It hasn't done much in the last few weeks. It clearly broke out of a big base and obviously has some product going here. I think I want to wait until it gets down to the 10-week and maybe perhaps try to find it on a dip there. So if it doesn't continue to rise up, I can get out of it. I don't really like the fact that its momentum is starting to wane here, whereas we're making higher prices here but lower momentum here. So I'm a little bit worried about this, and I don't know what they are. If I go look at the product list, that might encourage me to be a little more kind to the stock, but at this point it's a name I don't know very well. It is a small cap, but it was this sudden surge where they might have came out with some great product, and now the stock seems to be just meandering sideways since then. Nothing wrong with it, but hard for me to want to buy it here. So HanesBrands I like because it's starting to hit a new 52-week high, and with that new 52-week high, that's going to attract institutional interest. And the other thing I like about the stock was it was starting to surge, then pulled back during the COVID, started to run up again and then pull back. And we see this on some of the leading price action. We'll see it kind of surge to be one of the better stocks, pull back, and then all of a sudden institutions start to buy it up. In this case, they started to buy it up around the 10-week moving average, and now the stock is starting to run higher. So that looks pretty good to me. Here's Amazon, and I think we all know what that chart looks like. It's been unbelievably good, and they came out with earnings last week, and they were very, very strong. For me, the way I treat these stocks, I don't think Amazon's going away anytime soon. I like the whole thesis of their business, and they're going to continue to be a great company. If they needed to pull back or whatever, you could probably look to find support on the 50-day moving average. And in this case, I've only got a 2-year chart, but what we see here was, roughly it was hanging around the 2000 level, and then all of a sudden it surged up. So this has been a 50% gain since early April. Quite stunning. And sitting up at $3,200, even if it pulled back a bit, it's probably got a nice fourth quarter coming. Here's Lakeland Industries, and on Lakeland, again, this stock is starting to push, and it continues to work its way higher. Again, I don't know anything about the product. I want to focus on the chart. What we see here is the price action is pushing up, and we call this a bull flag. And what this bull flag represents is a consolidation after a big gain, and now it looks like even so far this week it's already started to make higher highs, and it wouldn't take much to jump above this $28 sword. And so with that, the stock looks to continue higher. Pretty nice looking chart and nothing really to complain about. Probably the biggest interest I'd have in it is making sure that it was going to do well in a season like the holiday season, as opposed to, let's say, boating or something like that, where it might be more of a summer sort of equipment, or life jackets or something. A superior group of companies. This one broke out to new 52-week highs here. Very big surge. So this is nice to see it consolidate, and probably if it can get back above its $20 level, I think that's probably a good looking chart that's definitely starting to change shape. It had been declining for 2 years, and now all of a sudden it's got something that people like, and it really surged on this volume. It is a small cap stock, but I like the way the price action went, and if it could pull back a little in here and give you a chance to buy it, that might be all right. Here's Ollie's Bargain Outlet, and we're seeing this $100 level be pretty major. It briefly broke out above that, pulled back. Any sort of breakout again here, and I think you probably want to add to Ollie's there. And the reason we like that idea again is when you break out to new highs, who wants to sell? The stock's in a winning position, and everybody who owns it is in a winning position. So that lessens the amount of overhead supply. People are willing to hold it because the stock is doing well. So here's Vipshop Holdings. What we see here is this is breaking out to a new 5-year high. Very, very bullish. And on this breakout, really a pleasant sight to see it push up to the top right-hand corner. And we could expect that to continue. I mean, it's been trending really, really well. So here's Big Lots. And again, this is kind of the flagpole, a bull flag. And if it could start to break out here, I think, that's exactly what you're looking for, is this bull flag pattern, and then they start to continue to head higher. Before the stock breaks down, there's no guarantees. The idea is that what we're looking for is something that wants to run into the fourth quarter. And that's the reason that we're looking at these stocks today. JD.com has been pushing up almost every week here. It's been bull flagging for the last 3 or 4 weeks. Can it continue to work higher? I'd like to think so. On this, one of the solutions that I use on these names is I don't want to see their big uptrend start to break. So in this case, I've got an uptrend line here. I want to be careful if this starts to break down here. And the reason is because it makes a wave and momentum, comes down, and then makes a quick wave up, but then has no staying power and starts to roll over. And when we look back here, we see that same sort of pattern where it was here, then it makes a quick wave up and then starts to weaken. And again, this was heading into the second half of the year, and the stock weakened right at the point where we'd expect it to go higher. So if that's not going to happen, we probably want to let somebody else own it. So I would use either the momentum indicator. If it starts to wane, that would be a concern for me. And the other thing is it's outperforming the S&P 500 here in the purple area chart. Okay, so to complete with JD.com again, if I have this relative strength start to break down, or if I have my momentum start to break down, I want to be a lot more cautious to make sure I haven't let the gains go on these leading stocks. Here's Gaia, and I have no idea how to pronounce that. This stock broke out to new 52-week highs this week. That's a pretty good move. And the other thing we like about the stock is the scooter ranking compared to its peers has actually been behaving pretty good since last year and starting to run up to new highs. And you can see that the stock was behaving better in 2016, 17, and 18, then went through a 1-year kind of hiatus, and now looks like it's getting back on its horse to start traveling. So this one looks particularly interesting to me. Alibaba is a big name we all know, and this one has broken out nicely. Broke out, bull flagged, and now it looks ready to continue to go higher. I'd like to see that. That's a pretty positive thing. One of the things that happened during COVID was it came down and it bounced right off this zero level, and that's kind of an area that we like to watch on the charts. When momentum can stay positive, that's pretty good. So this chart still looks great. It looks like it wants to head higher. Here's Greenlane Holdings. Again, this name I don't know anything about, but what we will say is they IPO'd up around $25, fell down, and has consolidated sideways. If you can get a break above this $4 level, maybe it's something worth looking at and a little bit more interesting. Lululemon has been a beast. It just continues to keep running and has been sitting up around this $300 amazingly for 2 months now. And again, they've done everything well. They've got their own online stores, so they're doing good online. Their clothing wear is done well for stay-at-home attire. Lots of reasons that people are interested in this name. So it could probably continue its really strong run into the fourth quarter. New Skin Enterprises, this one is just trying to break out to new 52-week highs. Very nice push here, and one of the reasons that it's showing up so well on the scooter ranking is the stock is jumped up and is now bull flagging and looks like it wants to continue to go higher again. Target is breaking out this week, so it's really timely of us to be covering off these names. This stock looks ready to run. Lots of room for momentum to go higher here as we head into the fourth quarter. Unicharm, this stock's really strong. I'm not sure what the big price action back here was, but the stock looks like it's really starting to break out of kind of a sideways consolidation and start to actually work its way higher. So that looks pretty good. HanesBrands, the trend hasn't been great for 5 years, so unless they've changed the shape of underwear or something, I'm not sure that those are the chart shapes I'm looking for. They probably have more than that. That was a bit of a joke. But the point I would just say is be careful on this one. The chart hasn't really had any upward momentum in the past, and so the fact that it's briefly up here doesn't suggest that it probably has more to run. I don't know about you, but I've been doing a lot of shopping at Costco online. I had golf balls delivered the other day, and it's beautiful chart here, just starting 4 weeks tight pattern and starting to break out to the upside. This looks like it's got a run set up for the fourth quarter. I like the fact that it's broken this downturn price action, and what I mean by down momentum area here. So we see that the stock was building a downward trend, just pausing really, and it didn't do anything for the whole year, and now it seems like it's ready to break out and go on its big run. So I like the fact that it's just starting to move here and probably has more room to go. We're just going to go back, and now here's Procter & Gamble, and this one's starting to break out to new 52-week highs. What's not to like about that? That's a very nice chart. Everything is starting to turn up. So the scooter ranking trying to get back above 75, and again, they're not my favorite because they don't really have robust growth. They're going to have some sort of momentum increases here, but they're stable, right? And so they're not going to be as wobbly on the earnings, but starting to break out to new highs. Everything's trending up. PPO is now moving above zero. I like that. There's not a whole bunch to miss on that. Here's L'Oreal, and this one has been running up nicely. And just looking back, it hasn't done well in the fourth quarters. So maybe perhaps it's not a fourth quarter stock, but that might be one reason that I would leave it. Elf Beauty, $20, and it's going, if it can get through there, it would be breaking out to new 2-year highs, so that would be nice. Sitting right here on the 10-week moving average, any sort of breakout up here would be a nice entry where you can set risk or a stop very close. Walmart is flagging nicely here, trying to hold up. And it wouldn't surprise me if it follows Target and Costco higher and starts to move on as they improve their online offering. Decker's Outdoor, this is a very strong chart. You're up in the top right-hand corner. Even with the whole COVID thing, everything seems to be holding up. And again, it's had a nice big 3 or 4 year trend, consolidated here for a year and a half. It'd be nice to start to see it move above this 200 level. Unilever, much like Procter & Gamble, lots of consumer staple products. $60, it's trying to break out to the upside. That would be very bullish indeed. Would like to see that happen. PPO is just heading above zero. This looks like it's probably going to follow those other big names higher. Here's Liquidity Services. I don't know what they do. Broadline retailers, probably something like a Winners or something like that. Anyway, the stock hasn't done much for 3 years. Can it really get going? I like the PPO right at zero here, but I do want it to start to turn up here. And if that can happen, and again, with a lot of retailers going bankrupt, maybe this one handles those products as they switch, and that would be very friendly. Rocky Brands, stock consolidating sideways here for 4 or 5 months. Again, I don't know anything about their product line. I do know I like one thing on this chart. What I like to see is that the momentum trend that they had that was going down, I want to see this break out, and I'd be especially happy if it could start to do that, break above zero. Back here it was trending up nicely. I might even move the line up to a different place here, up to this trend. And as long as that trend can continue, that would be worthy. I do want to see it get going back in its uptrend. This was quite a fall here in March, and it's just chopped sideways. So a breakout above this 23 area would probably tell you that it's ready to go higher, and that would also be back above the 40-week moving average. So tougher stock to look at. Again, I don't know anything about their business, but I do like that the chart is trying to revive itself, and that sudden spike last week was probably a clue that something's going on. Crocs is starting to make a nice push to higher ground here. 43 was the previous high. It's just kind of wandering sideways. The chart has been trending up nicely and had a nice uptrend for the second half of last year. So perhaps that can resume itself and get going back up to new highs. I'd like to see that. I want to see the breakout through this. If I was to pick a level, I want to get through this 37.50 again and set my stop relatively close underneath. Colgate-Palmolive, another consumer staples. I would just say that it's just breaking out to new highs. We're seeing it with Procter & Gamble, Unilever. A relatively stable name is Walmart, Target. All of those kind of major brands I would expect to do well here, even if the economy is weaker than we might expect. I like the fact that it's ready to push to new highs here. PriceSmart. The chart doesn't give me a lot of comfort because it started to break down in 2018, and we might remember that there was a big run into the summer of 2018 and then a fall off in the fourth quarter. Well, the stock hasn't really done much since then. Maybe it's got something that's going to start, but so far it hasn't. It would need a breakout through this $66 level to start to get me interested. And I still don't like how choppy the chart is. That is more difficult, in my opinion, to own. Okay, so briefly, let's just wrap up with a few more here. Here's Estee Lauder going higher. And the point I want to make on this chart, again, it's got a little downtrending trend line here. I want to see that start to break. Same thing here on the momentum indicator. And if that could start to push up, I think that's a big bullish area to get on board. Edgewell Personal Care, that looks downtrending, and I think I'd leave that for somebody else. Tilly's, same thing, hasn't really done much for 2 years. Duluth Holdings, this one's been downtrending, stay away. Fast Retailing, and again, some of these names could turn tomorrow, and maybe the chart improves. I'm just saying that when the trend isn't their friend, let somebody else make the bottom in the stock. We don't have to be the ones trying to lead the way here. So here's 66, 64, $60. If Fast Retailing Company can break out to the upside, perhaps we can get back on this big uptrend they had going prior to the whole COVID thing. Nike, I think we all know the name, and if this can start to break out of this flag pattern or pennant pattern, that would be another bullish move into the fourth quarter with sports resuming. City Trends, just consolidating sideways, but the chart hasn't been behaving well for 2 years, so I think I'd leave that. And what we can start to see now is the chart temperature is changing, where these charts are getting a little colder looking. They don't look as nice as some of the leadership names that we've been studying. Here's Land's End, that's downtrending. Here's Buckle, consolidating sideways. Maybe this is one that could start to break out, but it hasn't really been that good to investors lately anyway. So hopefully there's some ideas there. So with that, thanks for taking the time to join me. If you have any questions, you can always email me at gregs@stockcharts.com, or you can also reach out at info@gregschnell.com. That works as well. If you've got any other ideas, you could head over to my website and check out some stuff there. I've got lots of things over there for people to look at. So thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesdays at 10:30 a.m. Eastern Time. You can also see the recordings on StockChartsTV YouTube page. Thank you, and have a good week. Bye-bye.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.